What's good, everybody? Hopefully you guys are doing good. Hopefully you're well rested. It is the weekend, but hopefully you're doing something that is productive. So I recently put out a video about dividend investing and how to get into it, an introduction. And as I had said, there is a lot to cover, and I don't have enough time in one video, and the video would probably be like 5 or 6 hours minimum. And I know you guys don't want to watch a 5 or 6 hour video. With that being said, I'm going to break it up into segments, and today's segment I'm going to talk about dividend yield. I didn't really talk about it too much in the previous one, so I'm going to go over the dividend yield, what that is, and kind of things to look for when you're making your decisions about what you think is going to make sense for you going forward. Alright, so here we go. This is straight off of Google. Like I said, we live in amazing times, guys. You have access to all this information. There's a lot of tools at your disposal. Make sure you use whatever you got. This is exactly kind of what I was doing early on in the days. I was just Googling and searching, and that's kind of what I did. So here we go. Dividend yield. A dividend expressed as a percentage of current share price. That doesn't really help us. The dividend yield or dividend price ratio of a share is the dividend per share divided by the price per share. It's also a company's total annual dividend payment divided by its market capitalization. Assuming the number of shares is constant, it is often expressed as a percentage. So that sounds kind of technical. Now here's one website I like to use, Investopedia. I'm not sponsored or affiliated with this. I like this website. I've been using it before, and it might be helpful for you guys who are starting to learn. What is a dividend yield? Dividend yield expressed as a percentage of the financial ratio, dividend divided by price, that shows how much a company pays out in dividends every year relative to its stock price. The reciprocal of the dividend yield is price dividend ratio. So here's a few key takeaways, and then I'll give you guys some examples. The dividend yield, displayed as a percentage, is the amount of money a company pays shareholders for owning a share of its stock divided by its current stock price. Mature companies are the most likely to pay dividend yields. That's good. That's a good point. Usually companies that are more well established, they've been around for a long time, they have a pretty good financial sheet, they're usually the ones that pay dividends. So a lot of companies that are still growing and they're expanding and they're doing research, they're usually not paying very high dividends or dividends at all, because the money that they're getting, they're putting back in the company for research and development, to expand, to grow, whatever the case may be. And I'll go over a few companies like that are growing, that are usually, it's more tech based for the most part, and they're not focused on paying dividends right now. They could at some point, and some of them do pay a low yield. Let's continue on. Companies in the utility and consumer staple industries often have higher dividend yields. That's true. The utility sector and the consumer staple, they're two of the more reliable industries because people are going to need utilities. And there's not a whole lot of competition in the utility industry. It's basically monopolized with local and state governments to provide for the best pricing possible. Whether or not that happens, you're the judge, but I'm just letting you know that's kind of how it works. That's why utilities don't really have too many ups and downs. They're not very volatile because people need utilities regardless. And consumer staples as well, they're usually more reliable. You don't really see a whole lot of ups and downs with them as well. I'll go over those in just a minute as well. Real estate investment trusts, REITs, REITs, master limited partnerships, MLPs, and business development companies pay higher than average dividends. However, the dividends from these companies are taxed at a higher rate. So that's very, very important. A lot of people you hear investing in REITs or MLPs, but they do pay a higher tax rate according to Investopedia. And I'm not a tax expert, so talk to your CPA about your tax situation, how much you have to pay in tax if you pay tax on these stocks. It's all going to be based on whatever you're bringing in for the year. MLPs, I know for a fact you have to file those separately. They send you a separate paper for it. I've got some of those, but at the moment I don't really own MLPs just because I don't want to. It's not the right choice for me. You got to do your own research. It's important for investors to keep in mind that higher dividend yields do not always indicate attractive investment opportunities, because the dividend yield of a stock may be elevated as a result of a declining stock price. So that's something you'll notice too. The dividend yield isn't always going to stay whatever it shows you. So it might say that it's 2%. However, if the stock price drops, the dividend yield might slightly go up a couple percentage points here and there, just to kind of help accommodate for the fact that their stock price is dropping. And also the reverse is true. If the stock price goes up, sometimes you'll notice the dividend yield drop a little bit, but it's nothing substantial. It's not like you're getting paid 5% for the yield and then it drops to like 1%. You don't really see that unless it's a long-term cut. All right, let's continue on here. Understanding dividend yield. Let's see if they give us an example here. Let's see. Here we go. So new companies that are relatively small but still growing may pay a lower average dividend yield than mature companies in the same sector. In general, mature companies that aren't growing very quickly pay the highest dividend yield. Consumer non-cyclical, that market staple items or utilities are examples of entire sectors that pay the highest average yield. Right, so usually companies that are more established, they're gonna be more reliable in their dividend yield than companies who are just starting out and they need finances to build the business and do all that good stuff. That's usually just how it goes. All right, let's see. While the higher tax liability on dividends from ordinary companies lowers the effective yield the investors has earned, even when adjusted for taxes, REITs, MLPs, and BDCs still pay dividends with a higher than average yield. The formula for dividend yield is as follows: annual dividends per share divided by the share per price. Now we're getting kind of technical. I'm just keeping it really simple because I'm assuming that if you're watching this video, you have no idea what's going on and you just want this thing to be as simple as possible. So that's what I'm going to do for you guys. All right, we got some more links and articles. So back in the day when I was learning, this is what I would do. I would spend hours. I'd dedicate at least 2 to 3 hours a day, minimum, regardless of work, school, whatever I was doing, because it was that important to where I needed to learn this stuff. Or I can just watch YouTube videos. That works too. I got you guys. Don't worry. I got you covered. Now, this is one of my favorite tools of all time. This is one that I don't really hear talked about too much. I know some guys have talked about it, but this is really a hidden gem. Dividend channel. I can't count how many hours I've spent on this website because it has so much information. Look at this. There's a ton of articles. Top 10 dividend ranking stocks, utilities, top NASDAQ companies, 10 high yield baby bonds, 10 oversold dividend stock. Like, you have so many tools here. It's crazy. 10 biggest ETFs. Oh, you know what? Actually, I want to check out that one because I need to do some more research into that. See, we're learning every day, guys. Top dividend ranking stocks, live dividend feed, and then you can screen these stocks so you have monthly dividend payers, preferred stocks, highest yielding BDCs, and you can just pick whatever you want to do. And it's really easy, like I said. So, for example, let's say you want to learn about high monthly dividend paying stock. You just click on it, and you know what? I already loaded over here. Okay, well, there you go. It came up, and it'll show you top yielding monthly dividend payers, page 1 of 72. So right now the highest yield is 27.68%, which is massive. It's the highest one, and you got 72 pages. It's going to go from that all the way probably to less than 1%. Now, the title of this video is probably going to be the dividend yield trap. And I'm going to show you guys why you have to be very, 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 very careful. And just because something has a high yield doesn't mean that it's something you're going to just jump into. With any stock, you are required to do your own research. You're required to talk to an expert. I'm not going to be liable for you guys if you make decisions just on a video. You have to do your own research. This is all for entertainment purposes. I'm just trying to get you guys thinking about how you kind of want to look at it and your tools going forward and things that I was doing that helped me out. Do your own research. Make your own decisions. Only you are responsible for your own financial decisions. Okay, so over here, let's just say you see this, right? PREF, P-R-E-F. Now, over here, a site I showed you guys earlier, Simply Safe Dividends, which is free to sign up. I'm not affiliated or anything. It's just a site I always use, and it's free to sign up. And then after a week, if you still like it, you can continue like a subscription thing. So look at this. I come over here, 27%. The dividend safety is unrated. I don't know the market cap, which is very, very important to me. I don't know if it's a big company, is it a small company, what's going on, right? I don't know that. And it gives you some information about them. It says principal exchange traded funds, principal spectrum, preferred securities, active ETF is an exchange traded fund launched by Principal Financial Services that funds is co-managed by Principal Global Investors. So, like I said, this is all a bunch of jargon. I don't know what any of this stuff means. and I come down dividend growth. It's very slow, -3%. They've only been paying since 2017, so that's not a very long time. And they do pay monthly, which is, I like monthly payers. However, it's not consistently. Look at this. It's up, it's down, it's up, it's down, it's up, it's down. And per share, you're going to be getting $5, assuming nothing changes with their yield. They don't cut it or anything. But as you can see, guys, there just isn't a whole lot of information on this stock. And I would not feel comfortable at all investing in this. I don't know what the information is. And also in Google, you can search as well. Same thing, there's no market cap. There's no PE ratio. It's only been around since 2017. And I just don't know enough to where I'm going to invest in the stock. That's an example of a dividend paying stock that's going to pay you monthly, but it might not be one to invest in because there's so much uncertainty. Like I said, that's just my point of view. Maybe you guys see something with this I don't see. Let me know in the comments below, because as I'm trying to teach you guys, there's probably something you can teach me as well. We can all learn and grow together. That's the goal. There's enough space for all of us to shine, okay? All of us can shine. Now, let me give you another example here, right? So that's that. We discussed it. Let me tell you about a monthly dividend payer I do like. Realty Income, aka the monthly dividend company. If you've been doing any research, you know what? Let me do this. While I talk to you guys about that, let me just have this thing load so I can come back and I'll show you guys why I am interested in this. The monthly dividend payer, I'm sure you guys have heard about this. People have been investing in it. Disclaimer, I do own this stock as well. Now, let's say I was doing my research, right? And this came up, Realty Income. First thing I always do is go to Google. That's my step number one. Go to Google. Google's easy. And I look at their chart. I say, okay, they've been around since 1994. So that's been a pretty decent amount of time. Overall, their chart has been growing. This is a good chart. I like this. They did have minor drops here and there, but for the most part, they are growing. Now, the market cap is 20 billion, which is not that big. It's decent, but it's not like a mega cap. Their PE ratio is at 41. I'm not going to get into PE ratio. That's a whole another topic. Just a quick little tip though. The PE ratio for for REITs is going to be usually higher. So on average, you'll see videos where guys say, the PE ratio should be no more than 20, less than 20 is better. But there's a whole lot of variables for that. And REITs, they usually just have a higher PE ratio because of the way they're taxed and the tax structure for it. I'll harp on it a little bit later in a different video about REITs and how they're structured tax-wise, just so you can get an idea, and then you can go talk to your expert, and he or she can advise you on the decision for you that's going to work. Now, once I do that, I see what's their dividend yield, 4.67. That's a pretty good number. If it's above 3 to 6% is usually the sweet spot for most of these reliable companies that are going to pay. And over here, as it says, Realty Income Corporation is a real estate investment trust that invests in freestanding single-tenant commercial properties in the U.S., Puerto Rico, and the U.K. They are subject to NNN leases. I don't know what that is, but back in the day, I would have looked this up to see what are NNN leases. I did not look it up. Something I should have done. A mistake when I started to invest in the beginning, but that's also a video for another time, my top investing mistakes. The company is organized in Maryland with its headquarters in San Diego, revenue of $1.49 billion, 194 employees, and it was founded in 1969. So this kind of gives me a nice appetizer for what this company is. Next thing I would do, I'm already interested, right? I say, okay, real estate, stock is growing, dividend yield is nice, it's a monthly payer. Let's do some more research. Very easy, you can search it, you go to their main page, this is their main page. They're a member of S&P 500, S&P 500 Dividend Aristocrat Index. Monthly dividends, strong shareholder returns, 15.3% compound average annual total, 600 consecutive monthly there we go, guys. This is the nail in the coffin right here for me. 600 consecutive monthly dividend payments. That is good. I like that. A lot of companies, when things are tough, they can't pay you monthly dividends consistently. 600 consecutive times. How many companies can do that? You know what, guys? Let me know in the comments below. How many companies are paying consecutively monthly at this rate? I don't think you're going to find a whole lot. 4.5% compound annualized dividend, 91 consecutive quarterly increases, diversified real estate portfolio, 6,500 plus properties under long-term net lease agreements, 49 states, Puerto Rico and the United Kingdom, 630 different tenants, 51 retail and other industries. Like I said, you can spend hours. There's so much information about the company, the board of directors, monthly dividend commitment, all this stuff you have to look at. It's required. You have to spend hours. You gotta know everything about the company. You're putting money, you're investing. You're really saying that, hey, I'm gonna give you my money because I think you guys are gonna be a strong company going forward, and I believe in your brand. I'm gonna give you money. You better know everything about it that you can. Everything. You gotta know everything. So as you can see, portfolio, occupancy, property type, composition, top 20 tenants. So I'm naturally curious, right? Curiosity killed the cat, but curiosity goes a long way. So I click on it, top 20 tenants, tenant, Walgreens, 7-Eleven, Dollar General, FedEx, Dollar Tree, LA Fitness, AMC Theater, Regal Cinemas, Walmart, Sam's Club, Sainsbury, Lifetime Fitness. There's a whole bunch of companies here. Have you heard of these companies? I've heard of all these companies. Number of leases, it gives you the number. Percentage of revenue, it gives you the number. Now, of course, some of these industries are struggling. LA Fitness, AMC Theater, but Walmart, Walgreens, 7-Eleven, FedEx, Dollar General, Dollar Tree, CVS, those are pretty reliable companies. Home Depot, those are companies that I'm pretty confident about they'll be okay. And then next, I would probably click on here, monthly dividend commitment. You click on that, and it's gonna load. And then it tells you right here the information that I told you earlier, dividend growth of 211%, and dividend increases, 100 dividend increases since 1994, 91 consecutive quarterly increases, dividend paid for 51 years, over $7 billion. They're just constantly increasing the payments, right? And compared to everything else, S&P, DJIA, 10-year Treasury, equity, REIT Max, Realty Income is outperforming them. Why get dividends from us? Monthly dividends, growth, stability. How often are dividends increased? Dividends are increased when and if declared by our board of directors after a review of our financial condition. How do I measure dividend income? Realty Income's dividend paying capacity. And it's just, like I said, there's a whole bunch of information. And I spent hours, this is actually a true story, I spent hours researching Realty Income before I made my decision to invest in them, and I just overall liked the business. I thought that they were very good, and after doing my research and talking to an expert, I said, hey, you know what, I'm going to invest with this. Let me see, Realty Income, and as you can see, their overall growth has been pretty consistent, the dividend growth. And over here, their dividend history, it's been paying out since, let's see, I think it was the 90s, right? 94 they've been paying, and every year they had a minor drop here. I don't know what happened there, but for the most part, they've just been continually increasing their dividend, and they're paying every single month. So this is an example of a dividend payer that pays monthly that I would definitely look at for myself if I was new and saying, hey, what do I want to invest in based off of all this? And hopefully by that point you've gone through every little tab I want you to open up. When you first start, the more time you spent with everything, the more you'll understand how it works, and you'll be more confident to make the decision if you want to invest or not. But this is what I would do. Go over everything, see what's in the news, their press conferences, see if maybe you can find out when theaters are going to reopen, if they're going to reopen, what's their plan for it. So there's a lot of things you can do. And the good thing about Google is Google also usually has some articles, their top stories here, how their financials are, and you can just go through all this stuff more for Realty Income, and you can figure out, okay, is this gonna make sense for me? But that's how I would do it. Look at that stuff. You got all these tools. I don't want to hear you don't have tools or anything. Oh, I'll come back to this later. There's a whole bunch of tools that you have. I'll look at that later. There's a lot of tools that you guys need to use, especially right now with easy accessibility for the internet and all that good stuff. Do your research. But yeah, the higher the yield, you really need to be cautious because it doesn't mean that it's guaranteed. A company can cut their dividend at any time, and you never know if they're going to bring it back up. They could just drop it and leave it as is. So you really need to do your research. And I don't want this video to get too long because I know it can get long. So I'm going to end it with this. This is the last thing. So as I told you guys in my previous video about dividend investing, these are dividend kings. Dividend kings is a list of stocks that have consistently increased their dividend payment for at least 50 years. And I also mentioned when I first started to learn about stocks and investing, I spent hours researching dividend kings. All these companies that you see, I've done pretty good research. I'm not an expert on every single one of them. Some of them I'm more curious about others, like Procter & Gamble. Let's see what else. Johnson & Johnson, Coca-Cola. Obviously those companies, disclaimer, I do own those. Those are the ones I spent more time with because I understood their business and I felt comfortable to invest in those companies. But here's the point of what I'm trying to say with this. Look at these companies and their yields. Dividend yield, Dividend King. American States Water, 1.59. Dover, 1.9. Northwest Natural, 3.57. Emerson, 3.23. Do you guys see any of these stocks that are paying over 5%? These dividend payers. So Federal Realty Income, 5.5%. Altria is okay. So Altria is one of the rare ones that they pay a pretty high one, but Altria is pretty reliable too, in terms of they've been around for a long time and all that good stuff. 8.1%. But for the most part, on average, you're going to notice that these companies hover around 3 to 5% for the most part. That's usually where they're at, 3 to 5%. And I would say that if you're just getting into it, that's probably a safe yield to start with for most of these companies. Like I said, there's always going to be exceptions to the rule. And Altria is one that I know a lot of people invest in. I'm actually invested in them as well. And they pay a very high yield. But yeah, so that's what I would look at. The Dividend Kings, you can click on them, you can see their financials, you can see their payout ratios, their 3-year dividend growth, years of consecutive growth, the PE ratio. All that information is available for you guys. This is from MarketBeat, which I used a couple of times, not sponsored or affiliated with them at all, just another tool I like to use. So just to recap, I don't want the video to get too long. When you're just starting, you need to have a plan. So start with, like I said, this is very helpful, Simply Safe Dividends. It gives you a nice breakdown. You'll have the financials, all that good stuff. And then also I always have a tab for dividend channel because as you can see, this is reliable as well. It gives you a nice breakdown on the side tab here. You have news articles that are here. And this is just a great site to kind of learn, okay, what companies pay, what companies I'm interested in, different industries. Like I said, it screens it for you guys. So depending on what industry you're interested in, you always have that option to look into it, dive into it. There's so many different articles here that you have, and there's so many different companies that you can invest in if you choose to invest after talking to your expert CPA. Very important. Alright guys, so hopefully that video, it wasn't too long. I think it's like 15-20 minutes. It helped you better understand dividend yield, what to look for, and obviously I can go give you guys a lot more examples, give you a lot more breakdowns, but like I said, I don't want these videos to be hour-long videos. I think 15 to 20 minute range is a good range to where you guys will still want to watch it and all that good stuff. Alright, if you have any questions, let me know in the comments below. And quick disclaimer, I do own some of these companies mentioned. I am not a licensed stock investor. I'm not a CPA, just a guy on the internet sharing my views and opinions and my thoughts and what I'm seeing. So hopefully you guys can see what I'm doing and it sparks your interest so you can go do your own research, talk to your own expert, and make your own financial decisions. Only you are responsible for your own financial decisions, and only you can prevent forest fires. If you know where that's from, you're a 90s kid like me. Anyways guys, that's gonna be this next video. Oh, also too, another quick thing. If you don't follow me on Twitter, I'm gonna put a little page up for Twitter up here. Twitter is also something that I've been using. It is a great platform where you can just type stuff and it's really quick. If you guys want to ask a question or something, either do it on YouTube or via Twitter. Those are the best routes to go down. Twitter, I respond usually within the day. Same thing with Twitter. Same thing with YouTube. And yeah, I've been pretty active on Twitter, been posting a lot, been replying a lot. There's a lot of great people over there, been learning a lot. So if you want to follow on Twitter, I will put the link in the description, and you guys can follow me on Twitter as well. Alright guys, that's going to be the next video. As always, if you're not already subscribed, don't forget to subscribe. And if you liked the video, don't forget to give it a like. Until next time, peace.